Welcome again. We are going over study problem 3-3. Previously, we produced the asset side of the balance sheet. Now, on the second video, we will come up with the liabilities and equity side of the balance sheet. Let me remind you of what we found so far. The asset side of the balance sheet, by just adding together different items, including total current assets, net fixed assets, and other assets. So adding up these three figures help us come up with the total asset figure. Now we need to come up with statement, which is the second part of our statement, financial statement, the balance sheet, which is liabilities and equity side. Let's try to identify those components. But let me briefly eliminate those that we have already used. Again, so we have already used cash, accounts receivable, inventory gone, gross fixed assets is gone, other current assets we have already used it, and accumulated depreciation is gone as well. And we're also done with other assets as well. So we're not left with too many options actually. So because we need to start with the liabilities first and then equity, let's identify which items here would be liabilities. Obviously, accounts payable is a liability, and short-term notes payable is also a liability. Long-term debt is another liability, and that's pretty much it. So we have three liability items. But which one has more liquidity? Which one is coming due soon? Obviously, the first two, accounts payable and short-term notes payable, are due soon, so they would be considered as current liabilities, whereas long-term debt is a long-term liability. So when we are producing our balance sheet, the order of the account items should reflect this distinction as well between current liabilities and long-term liabilities. I already prepared a layout, and so we can go ahead and list those current liabilities. So we mentioned accounts payable and short-term notes payable as current liabilities. So let me go ahead and write these down. And again, let's just create our alignment line. So we decided that would be $23,000. The next item was short-term notes payable in the amount of $10,500, and they should sum up to give us our current liabilities, and the total should give us $33,500. We have also long-term debt, so that needs to be considered as well in the amount of $200,000. So adding up current liabilities and long-term debt will give us total liabilities, and the total should give us $233,500. Okay, so we are pretty much done with the first part. Let's go back to the givens, and so we still need to figure out equity portion. So the equity items look like they are only common stock and retained earnings, and I don't see any other liability item here. However, we have even though we know the common stock total, we are not aware of retained earnings. So where can we find that number? Well, luckily, recall our accounting equation, so which basically states that total assets equals liabilities plus equity. Obviously, we can consider the equity account as a residual account. The accumulated retained earnings should be such that this equation holds. So that's kind of the key result that we will need. So let's go back to our balance sheet. Also make sure our alignment line is good. So we decided we have common stock in the amount of $490,000 and retained earnings at an unknown amount. Regardless, though, one thing that I know for sure is that that figure should establish that liabilities plus equity is equal to $1,120,700. So let's do some algebra here. So that number, $1,120,700, would be equal to our total liabilities, which was $233,500. So this figure over here. So let's go back again. So this number here is $233,500 plus total equity. So from this equation, it is not difficult to find total equity to be I believe it should come up to $887,200. Now we can go back to the next page and figure out what retained earnings should be, so that our total equity is, as we mentioned in the previous page, $887,200. The number that we need for that purpose would be retained earnings, and retained earnings therefore is equal to $887,200 minus $490,000, so which should give us and let me write it with another color, because this is, as I mentioned, a residual account, $397,200. So let's confirm that our calculation is correct. Common stock plus retained earnings will give us total equity in the amount of $887,200, and that pretty much does the trick. And now if we look at all that we've done, that should pretty much do what we need. Let me again highlight liabilities here. So all these initial section will give us total liabilities, and the second part will give us total equity. Luckily, total liabilities and equity should add up to total assets, which we were able to confirm. So we are done with the liability and equity side of our balance sheet as well.